First, I'd like to begin by thanking the VCC DC organization for allowing us to participate in this great event. My name is Jose Torres. I'm the Vice President Market Manager for CIT Bank's Mortgage Division. And today I'm here to talk to you about our affordable home mortgage program. Next slide. So CIT Bank's affordable home mortgage program is an offer that provides up to $25,000 to help borrowers pay for loan-related fees and closing costs on FHA and our Fannie Mae Home Ready loan programs. The $25,000 can be applied towards lenders' closing costs, third-party fees and settlement costs, points to buy down the interest rate, and we also allow it to cover our upfront MIP on the FHA program. There's no increase to rate, no increase to payments, and no increase to any points. Next slide. Our goal is to help our community. We want to expand home ownership opportunities and provide financial assistance in the form of a lender credit to be used for home loan related costs. The affordable home mortgage program requirements are that it's available on our Fannie Mae and our FHA programs. The FHA loan programs guidelines will apply, as well as the Fannie Mae Home Ready guidelines apply. The offer is available throughout Southern California and available census tracts. There are income restrictions that will apply as well. And again, the affordable home mortgage program can be applied towards home loan related fees up to $25,000. Next slide. We know that buying a property or purchasing a home can be very expensive. You have costs such as lender charges, processing fees, deed recording fees, mortgage recording fees, flood insurance, title insurance, escrow fees, wire fees, document storage fees. On FHA, you have upfront MIP, which can be costly of up to 1.75% of the loan amount. We also have impounds for property taxes, impounds for insurance, and the list goes on and on. Here are just some of the fees that we've associated that could be charged at the time of the purchase. But with this particular program, we can use our $25,000 to cover all of these fees. Next slide. So what is the affordable home mortgage program? What it is, it's a lender credit up to $25,000 that can be applied towards the buyer's recurring and non-recurring closing costs. This is not a loan. This is not a lien. It does not have to be repaid. There is no forgiveness period. It is a lender credit as stated at the time of closing. Next slide. So there are some guidelines. This is eligible on loans for single-family residences, condos, PUDs, primary residences only up to 2 to 4 units, and some have reduced LTVs if you look at the Fannie Mae Home Ready piece. This is available on purchases, refinances, and refinance cash outs. The occupancy must be primary residence at the time of the purchase and the closing. The CIT Bank Affordable Home Mortgage Program is only eligible in certain census tracts where there is a greater of 50% majority minority. The FHA guidelines and maximum interested third-party contributions, including CIT Affordable Home Mortgage Program, cannot exceed 6% per FHA guidelines. And you can see that there are some maximum third-party contributions when using the Fannie Mae Home Ready piece on this program. If the LTV is greater than 90%, the limit is 3%. If the LTV is between 75 and 90, the limit is 6%. And if the LTV is 75% or less, the limit is 9% for third-party contributions. Next slide. So terms and restrictions. This is available on FHA and Fannie Mae Home Ready programs only. It cannot be combined with any other CIT Bank home loan program. All of the proceeds of this offer must go towards loan-related closing costs and fees. The down payment must be borrower paid as required by FHA and Fannie Mae Home Ready loan guidelines. This offer expires when all of the funds have been exhausted. All or portion of the $25,000 offer may be reported to the IRS, and your client will be responsible for any federal, state, or local taxes. So I suggest they consult with their CPA or tax preparer on that piece. The customer cannot keep any portion of this offer outside of the loan transaction. All loans are subject to underwriter approval. Again, it needs to be located in a greater than 50% minority majority. and the borrower must meet program income guidelines. Next slide, please. Next slide, please. So the CIT Bank AHAMP eligible tracks we use with the GeoMap government website. We go in here and we pull the census tract data. So what you want to do is go to this website, type in the property address, select 2020 because there is no 2021 census information out yet. And you can see in this particular example, we put in a property on Serrano Street in Los Angeles. And if you look at the highlighted areas, you'll see that this property is 91.94% in a majority minority. We did this so that it expands it to a lot more opportunities for people to use this program, not just certain LMI tracks, but the greater of 50% majority minority. Next slide, please. The loan limits. There are loan limit requirements, restrictions, I should say. So in Los Angeles County, we can go up to $822,375 for a one-family residence. For a two-family residence, we can go to $1,053,000. For a three-family, we can go to $1,272,750. For a four-family in Los Angeles, we can go to $1,581,750. In Ventura County, you can go up to $739,450. For a one unit, for a two unit, we can go up to $946,650 for a two unit. For a three unit residence, we can go up to $1,144,250. And for a four unit property, we can go to $1,422,050. On the Fannie Mae Home Ready piece, you can see here that we can go on a single family to $548,250. Two units, we can go to $702 with an 85% LTV. Three units, we can go to $848,500 for the 75% LTV. And for a four unit, we can go to $1,054,500 with a 75% LTV restriction. Next slide, please. So the income limits on here. What we did here was pretty cool as well. The income limits are based on number of occupants in the household. So for households of family or for four family members, 4-person limits will apply. What that means is if you have one single bread earner and then a spouse and two children, that would be a 4-person household, for example. So in Oxnard, Thousand Oaks, and Ventura, with a single person household, we can go to $98,800. For a two-person, we can go to $131,733. And for a three-person, we can go to $164,667. And for a four-person, we can go to $197,600. For Los Angeles County, we can go to $80,000 for a single-person household, $106,667 for a two-person household, $133,333 for a three-person household, and for a four-person household in Los Angeles County, we can go to $160,000 as far as the income goes. Next slide, please. The income limits are different on the Home Ready piece of this. So for Home Ready, what we do is we use 80% of the average median income for that census tract. And you can see on here, we use the Fannie Mae lookup tool. So all you would do is go into this particular website, type in the property address, no different than we did with the geocode website or the geo website for the FHA piece. And you can see on here what the median income with the 80% piece of that. This particular property in here, you can see that the 80% of the area median income is $66,640 as an example. Next slide, please. So how are we going to apply these funds? We do it in a particular order so that way we benefit the borrower as best as we can. First, what we do is we pay for lender fees, escrow, title, prepaids, appraisal, any fee associated with the transaction that is eligible to be covered. Secondly, we buy down the interest rate so borrowers can apply funds to buy down their interest rate and get the most competitive rate in the market. Lastly, if it's an FHA transaction, we cover the FHA MIP, which is the upfront mortgage insurance premium. I also say on here that it cannot be financed. It will be considered part of the total loan amount. If financed, it would be part of the total loan amount. If not financed and balance of CIT AHAMP covers the full amount, we have to cover it all or none. And I'll get into an example here where you can see that on the next slide here. But again, it has to cover all of it or none, but the borrower does have to come in with their minimum down payment on both FHA and Fannie Mae. Next slide, please. So here's an example of a property in Norwalk, California. You can see that the average household income here is $112,563 for a family of three, which meets the FHA program guideline. You can see on here that the purchase price is $485,000. The 3.5% down payment, because it is FHA, is $16,975, which is what the borrower would come in with solely. The interest rate is 3% after buying it down $3,711. So the closing costs are $95,508, and the cost to lower the rate is $3,711. And the upfront MIP in this particular example is $88,190. Being that we have $25,000 available to cover these costs, you can see how it's broken down. We covered the closing cost of $95,508. We covered the cost to lower the interest rate of $3,711. And we covered the upfront MIP of $8,190, totaling $21,460. So in this case, the borrower utilized, again, up to $25,000, but got $21,460 of free money. Again, in this example, you'll see that we were able to cover all of the upfront MIP. Next slide, please. So here's an example of a purchase in Anaheim, California. The average household income, is $180,000. It's a family of four, so it meets the FHA requirement for us on the Home Affordable Mortgage Program. Purchase price is $752,000. The 3.5% down payment, which is the borrower's minimum required investment, is $26,320. You can see the rate is 3.25%, almost a point to buy that down, $6,977. And so we add up the closing costs. We have $11,432 of closing costs. We have $6,977 of the cost to buy down the interest rate. And in this case, the upfront MIP is $12,690. So you can see once we add up the $11,432 of closing costs and the cost to lower the interest rate of almost $7,000, we're at $18,409. So in this example, there wasn't enough room to cover all of the upfront MIP. So we can use up to $25,000, being that we only have about $7,000 left in this particular budget, and the MIP being $12,699, we would have to leave that on the table. Next slide, please. So the CIT Bank Affordable Mortgage Program may not be used for the following: borrower's minimum required investment. CIT Bank Affordable Mortgage cannot be used for program required reserves if applicable, which there are none on these particular two products. It may not be used to reduce the principal balance if the credit amount exceeds the actual dollar amount. May not be used to pay for any judgments, debts, collection accounts, or escrow shortages or missed mortgage payments. Non-realty or personal property, non-realty or personal items that the borrower agrees to pay for separately, including the amount subtracted from the sales price when determining the maximum mortgage, are included in the total cash requirement for the mortgage. Real estate agent fees: if a borrower is represented by a real estate agent and must pay any fee directly to the agent, that expense must be included in the total cash requirements for the mortgage. Repairs and improvements, any portion paid by the borrower that cannot be financed into the mortgage are paid for the borrower's total cash requirements. Condos, no seller HOA arrears, no new condo projects, because we don't do any new condo projects on this particular product. Realtor transaction coordination fees may not exceed typical fees charged by realtors due to CIT Bank Affordable Home Mortgage Program. And on FHA loans, CIT Bank Affordable Home Mortgage Program may not be used to make partial payment of the upfront MIP, as I outlined in the previous two examples. The CIT Bank AHAM may not be used to pay any of the realtor commissions, and seller, state, and local transfer taxes as well may not be included. We also have, next slide, please. We also have some really cool marketing material that we'd like to share with everybody on this. If you go to our booth, you can see it on there. If anybody has any particular questions, they can contact me directly. Next slide, please. And again, we're happy to be here available to help you pre-qual your borrowers or pre-qual anybody that's interested in this particular program. Again, my name is Jose Torres. Please feel free to come to our booth and ask us some more information if you're interested. Thank you again to VCCDC for this opportunity to present this particular program. Have a good day.